Good day and welcome to IIFL Finance Limited Q3 FY2026 earnings conference call. As a reminder, all participants' lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference to management. Thank you. And over to you, sir.
Thank you very much. My heartiest welcome to all who joined the call, ladies and gentlemen. On this call today, we are joined by Mr. Nirmal Jain, our founder and MD. We also have Mr. R. Venkataraman, who's our co-founder, and also Mr. Girish Kosgi, who's the MD for our housing finance, MD and CEO for our housing finance company. We also have Venkatesh, who's the MD and CEO for Samasta Microfinance. Through this call, we're going to run you through our performance for Q3. And before we go into the details of our financial numbers, I hand over the call to Nirmal to give you a perspective on the entire macroeconomic situation and the company's strategy going forward.
Good evening, everyone, and thank you for joining the call. Before we get into our quarterly performance, I want to first address the income tax special audit under Section 142(2)A, as this has clearly caused concern and anxiety in the market today. I understand that the term special audit can sound unsettling when taken out of context. So the direction under Section 142(2)A is a procedural step in our ongoing income tax assessment for a multi-year block period. After the search, there's always a block assessment for 6 years together. So this is not a finding, this is not an allegation, and not an adjudication. Such procedural audits are not uncommon for large, diversified financial companies with large transaction volumes and multi-years of data and complex operating structures. This provision allows the income tax authorities to appoint an independent auditor to assist them with verification and reconciliation of data. The audit report is an input to the assessment process. It is not a conclusion. There is no tax demand, no penalty, no determination against the company pursuant to this direction, and at this stage, there is no financial impact that can be ascertained. And we'll fully cooperate with the special auditor, but again, I reiterate that there is no impact on our operations, our capital positions, or growth plan. With this clarification, let me turn briefly to the macro backdrop. While markets have seen some near-term volatility, the underlying Indian macro environment remains supportive, with stable growth, comfortable liquidity, and improving credit conditions, and particularly in our core businesses of gold and mortgages. Now, against this backdrop, let me turn to what truly defines the quarter and our underlying trajectory. Q3 and 9 months FY26 reflect consistent execution of our strategy with strong growth, improving asset quality, and materially strengthened balance sheet. Loan assets grew 9.1% quarter-on-quarter, driven primarily by gold loan. Asset quality has improved across the board with significant reduction in GNPA from 2.14 to 1.6%, and also NNPA going below 1%. And you'll also notice that Stage 2 and Stage 3 are also trending down, indicating further improvement in asset quality going ahead. Our provision coverage is at 92%, well above the regulatory requirements. So over the past few quarters, we have consistently reset the portfolio, exiting high-risk segments such as digital unsecured MSME, micro LAP under HFC, and select MFI geographies. This is now clearly visible in numbers, more resilient portfolio, lower volatility, and better risk-adjusted return. From financial standpoint of view, we remain well-placed. Our ROE is 2.1%. ROE has been moving up and is 11.3%. Our consolidated capital adequacy is 27.7%. Liquidity of over 9,400 crores. Net gearing of just 3.6 times. Our funding profile continues to diversify. Cost of borrowings are trending down. And our ALM is comfortable, surplus across all buckets. Operationally, our AI-led risk governance and early warning system combined with digital network of 4,800 branches servicing 4.6 million customers continue to be our core strength. And this strength is also reflected in S&P, our international rating agency, of reaffirming our rating and revising the outlook to positive. With this context, we believe that the fundamentals of the business remain strong, stable, and improving. I'll now hand over to our CFO, Kapish, for granular details of our financial results. Thank you.
Thank you very much, Nirmal. So, ladies and gentlemen, for the quarter, the consolidated profit after tax before non-controlling interest was 501 crore, which is up 20% quarter-on-quarter. We recorded pre-provision operating profit of 1,075, which is up 101% YOY and 4% quarter-on-quarter. For the quarter, the consolidated AUM grew by 38% and 9% quarter-on-quarter at 98,336, being at the cusp of 1 lakh crore. Largely driven by gold loan, which crossed the pre-embargo level at 43,432, supported by a healthy gross NPA of 0.036. If I further dissect the AUM, the leading core products of home, gold, MSME loan, and microfinance, they collectively grew by 46% and up 11% quarter-on-quarter to 93,767. Gold in particular grew by around 26% quarter-on-quarter and around 189% on a YOY basis. The core segment now collectively comprises of 95% of our total AUM. As Nirmal mentioned, our gross NPA touches around 1.6%, and net NPA is around 0.8, which is down 82 basis points and 26 basis points respectively from the same period last year. The company does maintain a cautious stand on the unsecured NMFI segments and clearly focusing on recovery and collection, which has been showing good resilience and been performing well every single quarter as we progress over the last few months. With the implementation of the ECL, the provision coverage ratio stands at 92%. With our strategy to partner with banks and downsell our pristine assets, our assigned loan book stands at around 21,373, which is up 71% YOY and 15% on a quarter-on-quarter basis. Besides this, the co-lending assets stands at around 13,176, which is up 43% YOY and 11% quarter-on-quarter, taking the aggregate off-book at around 35% of our AUM. On a quarterly average, cost of borrowing increased by around 8 basis points from YOY basis and decreased 14 on a quarter basis to 9.24. To briefly update on our liquidity stands at around we raised around 20,007 crore from term loan, bonds, commercial paper during the quarter, and around 7,774 of our assets were assigned to various banks. And our liquidity stands at around 9,433 crore, adequate enough to not just meet our near-term liabilities, but also adequate to support and fund our growth momentum, which stands quite positive. ALM, as Nirmal mentioned, is positive across buckets, and our net gearing stands at around 3.6. While the 9-month ROE is what Nirmal talked about at 11.3, annualizing the last quarter ROE, our ROE stands at around 14.3, and ROA was at 2.5. Our basic earning per share stands at around 10.9, and book value as of 31st of December is around 306.85. Capital position remains to be healthy with the off-book strategy. The capital adequacy at a consolidated basis stands at around 27.7. For individual companies, NBFC is around 18.9, HFC is 47.7, and Samasta stands at 30%. But we did touch upon the revision and outlook from stable to positive by S&P. We also declared an interim dividend of ₹4 per share, which was approved by the Board of Directors and will be paid in due course. With this, I come to the end of the session and leave the floor open for Q&A. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nishant from Kotak Institutional Equities. Please go ahead.
Hi. Am I audible?
Yes, very well.
Yeah. Sorry. No, so just before the questions on the business, this tax audit, this will be for which financial year or how many years, and Any sense in terms of how long this continues?
So this, if you are aware, no, you must be aware that last February we had an income tax surge under Section 129. So after the surge, there's always a block assessment of 6 years. So this tax audit is not a tax audit; it's a spatial audit based on their findings during the surge, which will cover the block period of 6 months. This is supposed to get over in 60 days' time.
And this is for, like one financial year or what?
No, this is on the certain areas what they want to verify is for 6 financial years, for the block period. So this when the income tax surge has happened, so this is ongoing process. This is the ongoing income tax assessment. So this is always for a block period. So wherever searches have happened, the assessment happens for 6 years together. And for the block period that we have filed our income tax revised return, in which we have paid another 1.29 crore of tax or something.
And any specific items that you want to call out because of which the tax liability went up?
This 1.29 crore you are saying? No, this is a very insignificant amount. I mean, it's just a recomputation based on whatever this for 6 years.
Oh, okay, got it. Just on the business front, I was looking at your secured loans and the standalone business, which has a ticket size of somewhere closer to 2 crores and earns almost like a 14% IRR. So, any texture on who these customers are? Because, as we understand, typically there is a linkage between risk profile, ticket size, and IRRs. And, for such a large ticket, the IRR looks a little bit on the higher side. So, just curious, who are these customers and, what are these properties or, some texture of the business would be helpful.
So these are SMEs and these are priority sector lending and these are from smaller towns. And in fact, this is a new, so if you really remember our historical portfolio had 18-19% yield. So we recalibrated our entire business portfolio. And I think the average ticket size is not 2 crores, is it? Okay, this must be including the historical data also. Okay. So these are typically between 50 lakh to 1 crore rupees or maybe can go up to 2 crores also. And because they are from smaller towns and segments that we cater to through our branches, average yield is around 13.6 to 14%. That's what we are getting on a ongoing basis. And till now, in this portfolio, we don't have any delinquency as such.
Got it. And the secured MSME that's done from the housing company, what is the ticket size over there? Because I think that's sort of missing in the presentation.
That secured MSME ticket size is 14.1 lakh. That's on slide, which is slide number? Slide 23.
I know it's just missing. Anyway, I got it. And just final 2 questions. Any status update on the SRs? Any timeline that you're looking at for any cash receipts?
Last quarter, if you see slide number 17, when they have fallen from 3,500 to 3,000. In next year, 2026 calendar year, I think we'll see significant drop. Maybe most of these SRs will get released.
Got it. And finally, any plans on capital issuance at this stage?
No, at this stage, we haven't announced any capital raising plan. We are monitoring the situation very carefully, but whenever appropriate, we'll raise capital.
But there is any particular leverage level in mind, any particular capital issuance? I mean, if one has to sort of model it, at what point of time one thinks of?
Our situation is such that we are very comfortable on the subsidiary companies because if you look at our capital adequacy of home loans is almost 46-47%, and even microfinance is 27-30%. 30% is our capital adequacy. Now, as far as the standalone company is concerned, the gold loan has grown very rapidly. Typically, if you see, our strategy has been more of a bank partnership where we do co-lending and direct assignment. Co-lending was on a hold for last few months because RBI's new guidelines of CLM1 have come into force, from January. People are doing the integration. Once that gathers momentum, then we'll be very comfortable again on our capital adequacy, but we are monitoring it very carefully. We are open, but at this point in time, I don't have any timeline, that I can, there's nothing that board has decided and what I can tell you at this point in time.
Got it. But I mean, I'm just curious if I have to model, growth going forward at any particular ratio that you would kind of, urge us to see, saying
Yes.
that, beyond this, we'll probably have to look at capital.
Your point is fair. Growth, our leverage will keep it around 4.5, and capital adequacy would like it to be closer to 20. Right now, it's slightly lower, so we are monitoring it.
Got it. This is very helpful. Thank you very much, and all the best.
Thanks a lot.
Thank you. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Digant from GreenEdge Wealth. Please go ahead.
Yeah. Hi. Thank you for taking my question. First question is on gold loans. In the tonnage, have we reached the past peak tonnage? Like, have we crossed the tonnage? AUM, I understand we have comfortably crossed and moved beyond.
Okay. Yeah, Digant. Yeah, so I'll address this question. So I think our tonnage has been growing up very quickly, very rapidly, much faster than the industry, but we are around 60 tons. We are still a little short of what our tonnage was at the time of embargo. March end was around... No. It was 57.39. We have crossed that, and now we are at 59.4.
Okay. So good to know that.
We have crossed our peak tonnage before the embargo.
Okay, that's good to know. And see, my second question is this, that, now that, the tonnage, we have got all the low-hanging fruits, those clients who had gone away from us, we would have got them back, we would have given them LTVs in relation to the new gold prices. But, going forward now, in terms of new branches, new customers, what's our strategy like, because it's just that markets are getting a little competitive on the gold loan side.
I think markets are very strong because loan to value has gone up. The addressable market's capacity to borrow has gone up significantly because of gold prices, one. Two, there has been a clampdown on the unsecured MSME and personal loan, and many of these customers are also basically, moving towards gold. The awareness has increased. So what I see at the ground is a strong momentum. I mean, the underlying factors, what I tell you are, what I would, I think they are. But I think if you talk to the industry, then there's a very, very strong, environment, momentum in the business, and environment looks positive. So when we talk about competition, there are a number of players that come in, but market is very large, and we have a network of, more than 3,000 branches catering to gold alone. So, in our distribution catchment, I think we see significant potential to scale up. You look at this way, that our average loan per branch is around 12.5 crores, which is maybe half of the market leader.
Right. No, perfect. That's thank you for that. And then last question is just on numbers that I see that non-samastam or non-microfinance provisions are steady at around 300 crores. They used to be around 100 crores in the past, but now they are close to 250-300 crores a quarter. So when does this particular part stop bleeding? I think it's because of the unsecured MSME that this portion is slightly elevated.
If you see our discontinued businesses portfolio, in one quarter only it has come down from roughly 4,000 to 3,000. And that is like short-term 3-year loan that we had given for in some digital partnership and personal loan. Now, there's some flow from that, and that is has caused the provisions or the losses other than microfinance. But if you see, we are in line with our guidance because this quarter's loan losses provision annualized are around close to, I think, 2.5%. And the last quarter, if you remember, we had given guidance for full year at 2.8 to 3. Next year will be less than 2. So I think we are on track for that.
Right. No, perfect. I was just wondering, the gold...
we are on the guided path, and then next year we'll see a significant improvement as this book really runs down to a much lower number.
Perfect. And then just this quarter, the OPEX seems a little higher. Is it because, we pay incentives on the gold loan originated at the start or because, the whole AUM has grown wonderfully, but it's not translated into the, the pre-provisioning profit in an equally strong way. So just wanted your thoughts on that. That's the last time.
The point is valid, but this is one-time charge that we have taken for the new labor code. So I think 23 crore rupees additional cost has come for that revision in measurement of gratuity and leave. I think that all companies are basically getting this, which is, the new labor code has come in force, and the employee liability, particularly for gratuity and etc., has gone up. We have put that in the summary slide note also, actually, that there's 22.5 crore rupees.
Yeah, correct. That number I saw, sir. I just wanted to know that, so but even apart from that 23 crores, the OPEX was a little higher. So that's...
I think if we adjust that, then it's pretty much in line with, So OPEX has gone up by 50 crores, and that is, maybe half of that is because of that, and then there's normal inflationary growth.
Right. Okay. Thank you so much. Thank you so much.
Sorry?
Yeah. No. Thank you. Thank you so much, Nirmalji, for the detailed answers. Thank you.
Thank you. The next question is from the line of Abhijit from Motilal Oswal. Please go ahead.
Yeah, good evening, sir, and thank you for taking my question. Again, just kind of going back to that IT special audit which has been commissioned. So, sir, thank you for the clarification, but just trying to understand, this does not have any business and regulatory risk, if I understand this right? Because if at all after 60 days, whatever special audit happens, there could be a certain tax implication in which you can naturally contest. But beyond that, I don't think there is any other business or regulatory risk, right?
No, there is no special audit. The income tax department will have limited resources that they need. So this is just an input to them. This has absolutely zero impact on our business or operations, or there's zero risk to that.
Got it. And then, sir, the second thing I was trying to understand is on the housing business, you also put out one point in the notes to the accounts where you have said that, as advised by NHB, you have restated your March 25 NPAs and GNPAs, which is more in line with show the collections only after you realize. So just trying to understand until that point, right, which is March 25, when NHB said that, hey, both disbursements as well as collections should be done based on a realization basis. Until then, the entire housing industry was working on the cash received basis.
So I won't know about the entire industry. But what happens, supposing the checks which come in the last 1 or 2 days or last few days, they don't realize till the end of the quarter or the month. And basically, so this is like, okay, maybe, I don't know about the existing thing, but this could have been the practice of the industry, which, NHB has advised us that this is not correct. We will restate, we have done that. But important thing is that if you look at our December results, that they are in line with the check and on the realized money and not based on the check receipt but not realized. So we are now following NHB's guided practice, and in fact, with that only our RPs are significantly better.
Got it, sir. This is useful. And then on the housing bit again, we're still seeing that book is largely flat or a minor decline. And Micro LAP anyways, we have discontinued and put it in, I think, the discontinued area. Now, when is it that we think that, the cleanup is done and we can start accelerating even in our housing business?
I think this quarter cleanup is done. So from next quarter, we should see acceleration in the housing or the growth in the housing portfolio as well, with a very clear strategy on focusing on, certain segments that we are comfortable with and from a long-term point of view.
Got it. And so have we done any PLR changes in our housing book? Basically, have we passed on any PLR?
No, we have not done any
to the
PLR.
customer.
No change.
Got it. Okay, so that's all from my side. Thank you so much for taking my questions.
Thank you. The next question is from the line of Nishita from Sapphire Capital. Please go ahead.
Yes. Hello. I just had one question. Today only your Chief Information Security Officer, Samir Gadve, resigned. Any reason for the sudden resignation, and what will be the impact of that?
No, there's no sudden resignation. I mean, it's a normal, sort of churn that happens. People find better opportunities. Some people go abroad. So there's nothing, and then we're very competent second line and very competent set of people that take over. So it's very normal business.
Okay, got it. Thank you.
Thank you. The next question is from the line of Vedant from Nirmal Bang Securities. Please go ahead.
Thank you for the opportunity. Am I audible?
Yes, you are, Vedant. Go ahead.
So congratulations on a great set of numbers, sir. We have seen a tremendous growth in our gold loan portfolio. So going forward, at the current gold prices, how we are seeing the growth in gold loan portfolio?
I think the prices remain at current level. Even if they don't go up from here, but they consolidate, then we'll see very strong growth in the gold loan portfolio. I mean,
similar kind? 25-26% growth on quarterly basis?
Should be, yeah, I think that should be a very comfortable target.
Thank you, sir.
Thank you. The next question is from the line of Bhaskar from Jefferies. Please go ahead.
Yeah, good evening. Just one question regarding the ARC transaction during the quarter in the housing finance business. Could you give some texture on how much of that was micro LAP and how much was pertaining to the affordable housing book, that 900 crore kind of ARC deal which you did this quarter?
So Girish is here with me. Maybe, he's our new CEO. Maybe I'll just give a little bit of backdrop to this and then head it over. I mean, maybe Girish can add if there's something. So I think with the new CEO and the board, based on the experience and whatever we have done in the past, we reviewed our entire portfolio of housing loan LAP. And obviously there are certain segments that we had indicated last time also, which is like BLC or which was that beneficiary linked construction, that is BLC, and then micro LAP that we exited completely. So all these segments, profiles of customers, or geographies or areas that we have discontinued, Girish and took a view which board has agreed with him that we should basically dispose of that portfolio once to ARC, and where the collection can be joint effort, and then we can focus on our continuing businesses on a strategic way. So almost about 900 crore rupees or something, maybe 875 crore rupees of total portfolio deal has happened. And I think that cleans the entire thing. And that's why if you see, our GNPA in housing has fallen from 1.4 to 0.5. That is the level that we we would like it to be. Maybe Girish, you want to add something?
Yeah, so basically what we've done is we've reviewed the entire portfolio, and we also have a vision for next years as to which all segments we need to operate, given the opportunity, and in terms of what is the kind of risk that we can take given the needs. So we have identified certain pools which we think is not fitting into our line of strategy when we think of building the book for next 3 to 4 years time. So we thought we should do one-time cleanup exercise so that we can focus on energies towards segments where we can try and build the book. And that is why we had done this ARC. Our focus, I think, going forward is going to be in terms of segments broadly on emerging and affordable. Affordable largely will be a priority for us, which can give us ease, and emerging to a certain extent which can help us in terms of growth, which will be in line or maybe slightly better than the industry growth rate. So this is one. And number two, in terms of products, I think predominantly we'll be focusing on HL and LAP. So this is the focus. So we found that certain products, as Nirmal mentioned, and also in certain geographies, the product speaks. For example, in certain locations, where we need to focus on HL predominantly and less of LAP and stuff like that. I think that is what we had identified. So we thought we will just clean up so that the path will be clear for us to grow in next 3 to 4 years time. That was the exercise what we did.
Got it. So just to clarify that BLC portfolio, I think which was about 400-500 crores, I think that has entirely moved out now.
Micro lab, that portfolio entirely moved out.
Okay. And so now the discontinued asset which is there primarily refers to unsecured micro lab was the other area where you were kind of discontinuing, and I think whatever is there in...
Micro lab also has more or less gone to the ARC in this HFC's portfolio. So micro lab was part of HFC portfolio.
Right. So the discontinued now refers to mostly the unsecured business.
Unsecured business was in personal loan portfolio, which is part of the parent company. Yeah.
Okay. Thanks a lot. That's it for my side.
Thank you. The next question is from the line of Adarsh from Enam Capital. Please go ahead.
Hello. Yes, sir. Sir, a follow-up question was on your this IT thing. Just wanted to clarify again that the block years that you mentioned, is it routine that after every raid you would tend to have a block, or it's specific to us that we've got a block of 6-7 years of...
No, it's a part of income tax law that after the search there's always a block. Search, is very well defined that the search can pertain to up to 6 years. The search is typically never for the current year. And then once that's done, then the assessment is block assessment always, without exception.
Understood. And just to clarify here, this would pertain to, in their view, tax evasion and nothing to do with authenticity of the accounts. Is that, how would you answer that?
So, when the search happens under 129, which happened February last year, so there happened a suspicion that there's a tax evasion. And then, but it's a suspicion, it's not a conclusion or not an adjudication. With the suspicion, they come in a surprise way, collect a lot of documents, evidence, statements of the people and everything. Now, the way the income tax process is, so the search department is supposed to collect facts and evidences, but they are not supposed to analyze or come to any conclusion on that. So then that goes basically to the assessment department. And then they are supposed to analyze and ask the company that, okay, these are our, based on our findings, what do you want to do? We give you an opportunity to file a revised return, and that has to be for a block period. So that is what we did. And, when the data collected from search or whatever evidence, data document they have, is something where they need some external help for reconciling, verifying, that is when they appoint special auditors.
So which means, what I'm trying to understand is this is not like audit specific or, checking the authenticity of the accounts. It's more to do on tax evasion.
Not at all. I think special audit word to that extent may be misnomer. It is not anything to do with accounts. It's more to do with what they found in their search needs to be verified or reconciled. See, many times in the search, they can take certain documents. They may not even if they get access to all the data and all the accounts, they can't analyze in their 5-6 days that they are there.
Understood. Thank you, sir. That's it from my side.
Thank you, others.
Thank you. The next question is from the line of Ranjit from SIB. Please go ahead.
Yeah. Good evening. And congratulations for your better results this time. One thing which I wanted to ask is, what is any scope is stipulated for the special audit? And the second thing is, any preliminary assessment has been done by the company with regard to the maximum possible impact on account of these tax issues?
No, sorry, first part of question, can you repeat, please?
Yeah. Can you just brief about the scope of the audit? Any scope of this audit is being given by the tax department?
No, I think the scope of audit will be restricted to the search findings. So, the report also is not fully shared with us. When the income tax search happens, they collect certain documents and statements. We would know from our point of view, whatever they've taken, they're given. But then, so the scope is always limited to that.
Okay. One more thing with regard to that, whether the special auditor has been already appointed or is it under the process of appointment?
It has been appointed.
Okay. The second point with regard to the preliminary assessment about the maximum possible impact on account of these tax issues. Anything company has ascertained?
No, there's no way to ascertain, but what we ascertain is based on that we file our revised return, so that we already done.
Okay. Thanks for the clarification. Have a great quarter. Thank you.
Based on whatever findings and everything, we are supposed to file our revised return. That we have done for 6 years block assessment together. But there's nothing much, in terms of that revised return that we have filed. So that is company's preliminary assessment, and now they have to verify it.
Okay. Thank you, sir. Thank you very much.
Thank you. The next question is from the line of Gav from Concall. Please go ahead.
Hey, thanks for the opportunity. Am I audible?
Yes, Gav, go ahead.
Yeah, thanks. My question is on the credit cost. For this quarter, our credit cost has come down to 160 basis points odd. How should we think about the fourth quarter and also next year?
Your voice is...
how much of...
Sorry, now I think your voice is not clear. Maybe can you pick up the receiver and speak?
Am I audible now?
Yes, go ahead. You're a little audible, but there's some disturbance, but yes, I can hear you.
So, just on the credit cost, we have come down to 260 basis points this quarter. How should we think about fourth quarter credit cost and also next year credit cost?
So, I think credit cost has come down and will continue to remain low. And so it's around 2.5%. For the full year, we had said that we'll end at anywhere from 2.8 to 3 because first half credit cost was higher. But this last 1.5 years, our credit costs have been unusually higher because of the turbulence in microfinance industry as well as in the micro lab. But going forward next year, we expect our credit cost to be even lower, maybe further 50-60 basis point decline. And should be less than 2% on a steady state basis.
Sorry, next year credit cost we're expecting...
So I think another 50-60 basis point decline in the next financial year. From the current...
250.
From this quarter level, yes. So should go below... So if this quarter annualized around 250, we should go below 200.
Got it. Thanks. Sorry, just a follow-up on the tax audit. Is this a normal standard SOP whenever there's a rate to double check your reassessment?
Sorry to interrupt. Sorry to interrupt, Mr. Gao. We are not able to hear you properly.
Am I audible now?
Not.
Now your voice is cracking in between. Can you?
There's a lot of disturbance, sir.
How about now?
Yeah, please repeat it.
Yeah, I just want to understand on the special audit. Is it a normal standard operating procedure after a kind of series and such? Is it part of the normal SOP for the tax department, or this is not typically done?
So, when income tax search is done, and the subject of the search is fairly large, complex, because our operations are really vast. We are almost more than 4 million customers, and if you look at 6 years, the number will be even larger. And then in such cases, it's a normal thing. But the income tax search itself is not something, that happens exceptionally. It's not that it happens, on a regular on every company, but when that happens and the operations are large and complex, then this is normal.
I see. So for a large complex search, a special audit is typically a normal procedure.
Yeah, again, if the search is or the the documents and the accounts and that they have are relatively simpler to understand, then they may not need a special audit. So this is not something which is automatic process. This is done only when needed. So, to that extent, this is by exception. It's not something which is automatic.
I see. Got it. Thank you so much.
Thank you.
Thank you. The next question is from the line of Ansh from Capital One Partner. Please go ahead.
Hello. Am I audible, sir?
Yes, you are.
Hello. Yes, sir. So my first question is regarding the net gain on derecognition of financial instruments. So as we see since FY26, since the start of FY26, there has been some movement in that line item. So going ahead, how should we model that, and what could be the strategy for this?
So this is something which is dependent on what assets we are able to sell to banks by way of direct assignment. And the way it happens is that you basically have certain yield on the assets, certain cost of funds or certain price at which you are sold to the bank. The difference, basically you can take NPV and reduce it by operating cost or service cost and the probable early repayment. That is how it is. So maybe the simpler way to look at it is that, it may vary from quarter to quarter a little bit, but maybe it will be linked to the portfolio of off-book assets that you assume in your model.
Okay, and so the assumption is that it is calculated on an upfront basis. Had we amortized this value going ahead, what
it automatically it automatically gets amortized because so every quarter the assets which are repaid, so to that extent it gets amortized. So it becomes the net amount which comes to profit and loss account.
I'm sorry, sir, it was a bit unclear. Can you just repeat it, sir?
No, it keeps getting amortized as the loans are repaid. So what you see is the new assignment minus amortization. That is what you see in the balance, in the profit and loss account.
So this can be the steady state number, right, going ahead?
Yeah.
Okay. So my next question would be regarding the home finance GNPA. It has reduced considerably in this quarter. So can you give us some color on that?
No, it's primarily because that certain NPA, as Girish also spoke about it, that certain categories of assets where we have significantly higher NPA and delinquency is higher that we have sold to ARC. So that has gone off our book in the HFC.
Okay. And so regarding gold loans, sir, our AUM has grown considerably, has grown very strongly, but keeping in mind the borrowings have not grown so strongly. So when I try to model it on an average AUM basis, when I try to get total income on an average AUM basis, I'm trying to understand as to how should we model this going ahead. Should this growth, if this growth continues and there is no movement in the borrowings, is there any other way we are looking at it?
No, it's a good question. So whatever growth we can fund either by borrowings or by selling assets to banks. In both cases, our income or our NIM will be similar, 6-7% or whatever, which will come either by way of net interest income or will come below as off-book income or income from assets which are off-book DO or co-lending. So, what will happen? Whatever you assume 60-40, 70-30. So that percentage of income will go above the net interest income line and the remaining will come below the net interest line, broadly in a similar range.
Okay. So and these gold loans, sir, at what average gold price we would have booked them?
No, so our gold prices, at all gold prices, but gold price gain or loss is not to our account. No, customer will take the gold back, only pay us interest.
No, I understand that, sir, but I understand that, but this movement we've been seeing in gold since the past year now, but we're just trying to understand as to in this quarter, what price you would have put that loan at?
So, right now our LTV is just about 61%. So obviously gold price, part of it is contributed by gold prices also going up, which reduces LTV. And every day the price varies, and generally we keep it sometimes below the 75% price, just as a being conservative. So there's a weighted average of everything. So maybe you can look at LTV, which is 61%, maybe a good indication of what prices they've been booked on average.
Okay, so I think, sir, we can take this offline. I think there is a bit some unclarity there's some unclarity on this, so I guess we can take this offline.
LTV you are saying?
On the gold price, sir, there's some unclarity here.
Okay, maybe I'll try to explain once again. So every day we have a gold disbursement and there are certain repayments. Right. Every day gold price, comes based, RBI has already indicated that where do you take gold prices from. So then your maximum loan amount is 75% that we can give to the customer. Typically we may end up giving a little lesser, say 70 or whatever. And then on this gold, as the gold prices go up, our LTV will go down. So at quarter end, LTV was only 61%. But because there are millions of transactions, so it's very difficult to say that, if there's any particular loan booked at what price, because they are booked at different point in time, partly repaid, renewed. So there's a continuous process.
Okay. Okay, sir. Okay. Thank you.
Thank you. The next question is from the line of Bhavin, an individual investor. Please go ahead.
Good evening to the management team of IIFL Finance. Post embargo by each passing quarter, I think the operating performance of the company has only been improving. My only request to the management is if it is feasible, the management can issue a clarificatory note and file it with the exchange on this income tax, because the special auditor word has spooked the nerves of many participants in the market, and that is the reason we have seen large correction in the stock price. So while I do not have any question, but I have a request to the management, if a clarificatory note on this can be issued and filed with the exchanges. Thank you.
No, sure, we'll do that, Bhavi. But also this analyst call transcript will also be put up on the website. So in the beginning itself I explained, but yes, I think your point is taken, we'll do that.
Yeah, it's my earnest request, sir, if separate filing can also be done, because not many people go through the transcripts and all, but anybody would go through a one-pager or two-pager related to this clarification. So there is no downside to this, but it may protect the interest of many investors.
Sure, thank you.
Sure.
Thank you. The next question is from the line of Shravya from Nomura. Please go ahead.
Yeah, hi. Thank you for the opportunity. My question is on the MFI IIFL Samasta business. So it's to do with the liability book. One can see that the bank, the term loans or probably the bank borrowings was declining till last quarter. Now that mix has sort of inched up. Though the cost of fund movement between the quarters has been volatile in a way, it was 9.7 last quarter, it's inched up this quarter. There were certain media articles which mentioned that the NBFC MFI's equation with banks have not been at the best terms, and probably whatever new money that they are able to raise from banks are coming at an adverse cost of fund. So I just want to understand, while it may not specifically be for that article, may not be for IIFL Samasta, but I just want to understand what's the ground reality for us and how are we viewing our liability mix on this book. Thank you.
So it's there's a slight decline in the total borrowing, and the refinance, basically the earlier loans get repaid, so that also gets repaid. So if you really look at it, it looks like 44 to 46. But if you go back 6 months, it was 52% of our total portfolio. So I would say more similar level. There is no significant change in that. And our cost of fund has, if you see the slide 31 again, has gone down for microfinance also by 10 basis points. So I would say that there's not any significant change there. I mean, they're similar. But given, for track record satisfactory for banks and also the parent, we have been getting new loans from banks also. This entire fear is more about standalone small microfinance companies which may or may not be able to survive the turmoil that happened last year. But otherwise, we find liquidity comfortable.
Right. So for us, the lines are and the limits continue to be available from these banking partners, right? I mean, there are no new challenges or okay, fair. That's fair enough. If I can squeeze in one more question again on the NBFC MFI performance. So in your two biggest states, second and third largest state, Karnataka and Tamil Nadu, can you help us understand if probably the 30+ book or 30 to 90-day book has that performance? How is that performance versus pre-crisis, maybe versus June of 24? Has the trends reversed back or things have normalized, or how has been your experience in these two states?
So Venkatesh will take this, he was the CEO of Microfinance.
In the month of November and December, the strongest comeback I can say was in these two states. Though the portfolio of Tamil Nadu overall for the industry also has dipped a little, but the collection efficiency has considerably increased. And in both the states, considering that Karnataka came out of the ordinance, what was their last MFI Act of last year, it's much better than the thing. So we have back in both these states at around 99.5 plus.
Right, and that trend pretty much continues in January. Would that be a fair assumption?
Yeah. The trend continues in January too.
All right, sir. Okay, those were my questions. Thank you so much and all the best.
Thank you. The next question is from the line of Abhishek from HSBC. Please go ahead.
Yeah, thank you and congrats. Pretty strong. Well, so one question on this gold loan group. And now, if I correlate that to the tier 1 of 12.8, how much can this growth continue with this kind of a tier 1? Or does it need to necessarily now slow down, or you can find something else which allows you to grow fast in gold loan?
No, Abhishek, now I think it more depends on our ability to do co-lending and DA. So that is what probably will sustain growth, and if not, then we have to raise equity. So I think that's a very simplistic answer to your question.
So is it urgent now to get equity, or can still go, say, 2 quarters or 3 quarters without raising it?
So it depends. If you are able to do co-lending and DA, then we can continue. We'll be on the edge, but we'll continue, and we have a strong capital adequacy in our subsidiary companies. But,
right.
For the time being, I think the co-lending engine has to start quickly and strongly.
Okay.
And
so incrementally, I think
which is, we can do at any point in time. But alternate strategy is to work with, the co-lending and DA.
Understood. I have one question for Venkateshan. So, what is the disbursements last quarter? I mean, especially if you can break it down into October, November, December.
In October, we would have done around 500 odd crores. In November, we would have done around 700 and 600 odd. And November, in microfinance alone, we would have done 700 odd crores. Overall, we would have done 800 crores in December for all products put together.
Okay, got it. That is helpful. And then I have another question. A question for Girish. So you use the words affordable and emerging. When you earlier made a comment, how do you define it here? Is it different from your previous firm, or what do you classify as affordable? What is emerging for here?
So I think if you look at the market, basically there are 4 segments. One is super prime, second is prime, third is emerging, and fourth is affordable. So So when you talk about affordable, typically this is a business where, we would be focusing on starting from tier 2, tier 3, tier 4 kind of cities and towns. So this is where we have an opportunity for affordable. So this segmentation is quite standardized across the industry. So these segments are pretty much standard. When we talk about affordable, these are basically on the salaried side, income level of let's say 20,000 to 35,000, and on the self-employed side, it will be on similar lines. The ticket size will be about 14 to 15 lakhs, and this also covers under PMAY interest subsidy scheme, where the loan is up to 25 lakhs and the property cost 35 lakhs. So this is typically the affordable segment. If you talk about the segment within this, basically this would be focusing on
the yield would be what? The yield would be what? If I talk
about, most of the companies will be focusing on yield of 12.8 to 13%. So this is the affordable business. When we talk about emerging, this is a level up, where the yield should be in the range of 11 to 11.5%, both focusing on salaried and self-employed, both formal and informal. So this is the differentiation between these two segments. In terms of
ticket size should be?
Ticket size should be about 20-21 lakhs. Affordable is 14 to 15, emerging is 20-21, and the next is about prime, 26-27 lakhs, and then we have super prime, which is 50 lakhs. So in terms of geography, I would say top 10 probably could be super prime, and the next 30 cities would be a emerging market, and the next 200 would be affordable.
Okay, so when I look at the yields and the average ticket size for the home loans part that you told, that's actually the yields are blended are around 10.5, 10.6, whereas the incremental target that you have is anything 11.5 and say 30, 11 to 30, let's say. So should we expect that going forward the portfolio yield or at least the disbursement yield should be higher, and then that should translate into portfolio yield going higher over a period of time?
Yes, you are right. I think the plan is to ensure that in next few quarters, the onboarding yield is going to go up, because predominantly our focus is going to be on affordable and emerging, which I spoke about in terms of customer segmentation, property type, and the expected yield. So this would aid in the overall portfolio yield going up. But this will take some time, maybe another 2 to 3 quarters, because we have started this already. Our focus would predominantly be on affordable and then emerging.
And the 32,000 odd crore AUM that you have in affordable home loan, as you reported in IIFL, that is actually affordable and prime rather than prime rather than affordable, as you described.
So
they are lower. So I'm wondering.
So basically, if you look at these segments, one city would give you an opportunity of doing or being in 2 or 3 segments. It is those pockets in a given city which will give the opportunity. So the exceptions are when you go to tier 3 and tier 4, predominantly 90% of business what you do is going to be from affordable. So every city would give you a mix, let's say top 50 to 60 cities would have an opportunity of doing 2 or 3 segments within the given city. So our new strategy going forward would be in terms of trying to increase yield, and therefore the overall yield on the portfolio goes up. So our focus is going to be on different segments, different type of collateral, different kind of profile within the given city. We are today presenting about, we have about 315 branches. Our focus in this would be on emerging and affordable. I hope I am
finally.
That makes sense. So, for example, make it very simple. Suppose if we take, let's say, Chennai. Now, Chennai is a large city, we all know. So, in Chennai, there are 3 segments available, which is prime, emerging, and affordable. So, there are affordable companies in Chennai doing only affordable business, which is basically catering to outskirt areas, where the property ticket size would be about, let's say, 30-35 lakhs, and the loan could be about 18-20 lakhs. Similarly, slightly away from city center would have an opportunity of emerging, and the core city center would have an opportunity of either prime or super prime. So some of the large cities would give you opportunity. The minute you go to small towns and all, I think predominantly it is affordable, which comes at a higher rate.
Sure. So what I was trying to understand, thank you for the explanation, so that from current portfolio which bought 32,000, average ticket is more or less in that affordable segment you described, but the yield is lower. So was it just that underwriting was still aggressive, focus on that, or what is the difference between why is the yield lower than typical affordable, which would be 12.5-13%?
So today, if you look at where we are present in top cities, which includes affordable, emerging, and also a little bit of prime. So it is basically focused on certain segments and certain profiles. So there has been a new strategy which is now laid out. So I think your question is that we have a book where the yields are quite low, even though we're into affordable and emerging. I think that's the question. Now, what we have done now in the revised strategy is that going forward in these locations, we're going to focus on the segments, which we want to focus on. For example, predominantly it's going to be affordable and then followed by emerging. So there is a change in strategy to a certain extent. This does not require our focus in terms of geography because we're already present in many locations which can cater to these two segments. And within those geography, within those cities, our segment focus will be little different, which will get us a higher yield.
Got it. Thank you so much and all the best.
Thank you.
Thank you. The next question is from the line of Abhijit from Motilal Oswal. Please go ahead.
Yeah, thank you for taking up the follow-up. While we are at housing, Girish sir, what is the housing bit growth that we are looking for from next year onwards?
Housing? Growth.
Yeah. Housing book growth. Yeah.
Yeah. So on the book, we plan to grow by about 15-16%, and on disbursement, it will be 24-25%.
Okay. So disbursements 24-25%.
Yeah.
Got it. Then a few other clarifications that I had. We just trying to understand, given that we received that special audit letter yesterday, and like you mentioned earlier, they have 60 days to complete the audit. So suffice to say, right, that in the next 60 days, this audit will be done with.
Yeah, they'll do it and they'll submit it to the income tax department only. The report goes to the assessment department.
Okay. All right. And then this audit is only with respect to certain points, where the IT department might have a different opinion, right, versus what we would have filed earlier in our returns.
So this audit is only related to the findings of the search. So search also was in certain specific areas where they had suspicion. So they collected data, documents, and whatever information and statement that they wanted, and they compiled, and it is restricted to that. See, the special audit has nothing to do with audit of accounts or whatever. Auditor name is generally can capture lots of things, but here their purpose is to verify the things which are found in search, or related to search findings.
Got it. And then this amount of 1.47 crore, right, that we have paid, right, based on our own assessment. The only thing is after the special audit is complete, maybe the IT department comes back with a final amount, right?
Yeah, they can raise a demand and dispute an appeal kind of thing.
Got it. And then lastly, sir, we said earlier that maybe from next year onwards, there could be a 50-60 basis points decline from current level of credit cost of about 2.5%. But suffice to say, given that, like you mentioned earlier, the cleanup in the housing business is complete, the gold loan business is doing well, and then MFI also, what we are hearing from others, there is no further deterioration at the margin, the collection trends, the par accretion trends are looking better. So even next quarter, directionally, right, you should see credit costs coming down, right, to get to that less than 2% for next year that you guided for?
Yes, so I think the glide path has already started. So you will see further improvement quarter after quarter.
Got it. This is useful. Thank you so much for patiently answering questions. And I wish you and your team the very best.
Thank you so much.
Thank you. The next question is from the line of Anusha from Dalal and Barusha. Please go ahead.
Yeah, thanks for taking my question and congratulations, sir, on a very good set of numbers. So on the gold loans, we have seen a very strong growth of around 26% on Q1Q basis. What has been tonnage-wise increase there in this quarter?
Yes. Yeah, there's about 7% increase tonnage-wise also.
Okay. Okay. And also on this special audit, was it the case that this special audit was supposed to follow after the RBI embargo, which was there a few quarters back?
Yes, so there was special audit done by RBI also, very thorough and detailed special audit. And that was only related to gold loan and for 3 years. Now, although this name, is similar, but this is very different. This is for certain areas of, search documents where they want to do, and it is for a block period of 6 years.
Okay. And sir, if you can just give us some color on the overall AUM growth. Like you said that for home loans, we are anticipating a growth of 15-16% in FY27. So some color on, how gold loans, we are anticipating growth there in FY27, even on the MFI side and on the business loans. So how do we expect overall AUM to grow over the next 2 years' time? And also on the MFI side, I believe that asset quality should have been much more better relatively because if I just compare the GNPA numbers, the relative improvement for the peers have been much more sharper. So what are thoughts on that?
So in last 2-3 quarters, we have been thinking our portfolio. We've been very cautious trying to completely realize our strategy. And so our denominator has not grown, has actually shrunk. So that has exaggerated the impact of asset quality and that also reduces our profitability. We'll be cautious, but now portfolio as the industry environment has become more sanguine, so we'll see our portfolio also growing and things getting better.
Okay. But otherwise, on ground, you seeing improvement on the asset quality behavior on the MFI side?
Yeah. On ground, there's significant improvement in asset quality, credit culture, and even the leverage of customer has fallen and the risk is just much lesser. And if you see our slide on microfinance, which is slide 32, you see that, the primary, the zero bucket, which is due today, how much you collect out of that, and that indicates the value strength, and that is at, all-time peak. It's much better now at 99.56%.
Okay. And how do we see overall AUM growth, say for FY27 across the segments?
I would rather talk about, because we have a little bit of diversified business model, not very widely diversified, and we have seen that, sometimes, some segments do much better than expected, some segments do a little lower than expected. On the whole, I think you should see about a 20-25% AUM growth next year.
Okay. And on any internal targets, for ROA, ROE in the near term?
So our ROE was in the range of 18 to 20% in normal times. So, we would endeavor to, reach towards that. So that is our internal target in next 2 to 3 years.
Okay, fine, sir. Thank you.
Thank you. The next question is from the line of Gaurav from HSBC. Please go ahead. Mr. Gaurav, we would request, please go ahead.
Hello, am I audible?
Yes, you are audible. Go ahead.
Sir, a couple of questions. First is on the gold loan stage 3 provision. I have seen that we have declined our provision QOQ from 42% to 19% in 3Q. So just wanted to know the reason of the same, and going forward, should we maintain at this level only? And second, in response to one of the questions, you mentioned that you're comfortable with growing gold loan book at 24-25% QOQ. So was that guidance for like 4Q FY26 or beyond that? Also, we can maintain the same run rates. These are my two questions, sir.
So basically, pace has been significantly higher. I mean, of course, quarter-over-quarter, probably this pace will slow down over a period of time. Now, I can't say what will happen this quarter, but longer term, okay. In the recent past, we have seen that there are two factors that are working for us. One is gold prices have been moving up. And two, in our branches, we are getting back our old customers and getting our productivity level back. Whatever impact was caused by embargo, we are just trying to undo it. But it's very difficult to give any guidance on that going forward. Now, you said that the provision we have reduced. That's what you say? What did you say? Stage 3. So, okay. Stage 3 losses are always, again, dependent on gold prices as well as your historical. So, the way ECL is computed is based on empirical data. And what we have seen is that our losses have been negligible. And that is why this number probably was much higher than what it ought to be. This number could have gone up during the embargo period when even NPAs appeared higher because many customers could not roll over. And, on 3 months interest backlog, it becomes NPA. But on a steady state basis, gold loan business typically will not have any losses. And also the percentage that is stage 3 is also very low, so it doesn't make any much impact actually.
Got it, sir. Okay, sir. These are only my two questions. Thank you so much.
All right. Thank you, Gaurav.
Thank you. The next question is from the line of Pranay from Karen Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, just a clarification on the previous participant's question where he was talking about the derecognition, net gain derecognition. So firstly, what is the purpose we are started doing in FY26 as opposed to FY25? And second, is it that a better way of raising your borrowing books as compared to borrowing which we have a 9% yield, 9% cost of fund? So is it a better way of, it's a less cost effective way of doing this?
Yeah, so this is better way because it releases your capital. And secondly, I think we have always been doing this. I mean, obviously with the volume it has gone up. And, in the COVID crisis and after that, after IIFL crisis, after COVID and after this, when the liquidity became very tight, that's the time we started doing it more aggressively. And then we realized that maybe long-term strategy also it makes a lot of sense because it can allow you to grow faster without really having to raise equity and dilute very frequently because you can, the assets go off the balance sheet along with the risk.
Got it. So what is the delta, sir, if you can say on a ballpark, what is the delta between our cost of borrowing versus we are selling the book on the one-time cost? So what is the delta we get on this?
No, typically, again, it varies from transaction to transaction. But it may be about 100 basis point more cost, but that's toward risk and capital and everything else. But again, it varies, Very difficult to, because there's a demand for PSL, there's a demand for retail assets by the banks. So it's like a market, where the prices fluctuate.
Understood. So, sir, this should be purely on which segment? This should be purely on the gold loan book?
Both, even microfinance for that matter.
Okay. And so once you are saying it reduces our capital, so basically it is, so you had mentioned it is amortized, but once you are saying it is reducing the capital, so it is not on amortized, it is on one-shot basis, right?
Yeah, so once you have sold the asset, they are off your book. So basically, you'll keep getting income on the difference of interest, whatever we agreed. That will take NPV, provide for some cushion, and then take it as upfront. Then what happens when the actual loans are redeemed, there's the time then you get the actual interest income, and then you amortize this against that. So actually, it will not be cash flow negative whenever, over a period of amortization. So supposing you have sold loan for, gold loan for 2 years, and there's a say 5% extra interest cost, so 10% is what you've taken up front. Every quarter it amortizes, so you are getting interest income and you are reducing this that way.
Right. Okay. Understood. So what percentage, so we assume that in the current quarter, what percentage of that amortization would be there, or of the Q1, which is part of the Q3?
No, so there are a number of assignments, and some of them, so everything keeps getting assessed. So I won't be able to give you one data for that, because see, over last 5 years, 2 years, 3 years, tens of such transactions would have happened, and everything amortizes at a different pace. So every transaction actually is monitored by the bank and as well as by us.
Understood.
Every customer.
Correct. So the interesting thing to see on the home finance, where we have significantly improvement in our asset quality, basically on the gross NPS and NPS, and so which you recently mentioned that the future plan of growing the AUM book over there. So at what level of NPAs do we expect we'll be comfortable in this book?
You are saying home loan?
Yeah, in the home finance segment.
So I think the current levels what we achieved in this quarter will be the comfortable level.
All right. Even in the growth which you will be expecting a 15% AUM growth and 25% disbursement growth in that.
I think home loan gives 15 to 20% is what we are 15 to 18%. So home loan will be slightly slower, but these are long-term assets. So
yeah. Okay. That's it, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today, and I now hand over the conference to management for closing comments. Thank you, and over to you, sir.
Thank you so much, and if you have any more queries, you can always get back to me.
Yeah, thanks very much for joining this call and for your patient hearing. For any further queries, you can reach out to our investor relations desk, and we'll be more than happy to clarify any further question that you might have. Have a wonderful evening.
Thank you.
Thank you. On behalf of IIFL Finance Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.